and gentlemen, good day and welcome to Insecticides India Limited Q1 FY2024 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vantalanchi from Choice Equity Broking. Thanks. Over to you, sir.
Thank you, Seema. Good afternoon, everyone. On behalf of Choice Equity Broking, welcome to the Q1 FY2024 post-results conference call of Insecticides India Limited. I also take this opportunity to welcome the senior management team. On today's call, we have with us Mr. Rajesh Agarwal, the Managing Director, and Mr. Sandeep Agarwal, the CFO. Kindly refer to the safe harbor statement on the last slide of the presentation. I will now invite Mr. Rajesh Agarwal for opening remarks, followed by Q&A session. Thank you, and over to you, sir.
Thank you, Vantalanchi. On behalf of Insecticides India Limited, I, Rajesh Agarwal, Managing Director, extend a very heartiest welcome to all the attendees of today's earnings call. I'm extremely pleased to present you the quarterly financial results of the company ending 30th June 2023. Before we start the financial numbers, I would like to begin the discussion with the brief update about the agrochemical industry. I'll request later to the CFO, Mr. Sandeep Agarwal, to discuss about the financial results, and then I'll explain the financial performance of the household question answer session. So first, let's begin with the industry overview. The agrochemical industry encountered unique challenges during this last financial year. So, good friends, the situation was such that the prices kept on jumping, and the price of all the chemicals, they were at a very high level actually in these past 2 years. And this also got triggered by the Russian war. And since last 6-7 months, the prices started falling. So this fall was very, very dynamic. Like we saw continuously the prices were under pressure, and it was not only the agrochemicals, but the chemical prices were also under pressure because China was continuously manufacturing and trying to dump the market with the cheaper goods, and the world was suffering. So there were 2 major reasons. One was the failure of monsoons. This was the period when El Nino was already declared, and the most part of the world had started seeing the drought type of atmosphere. Firstly, if I talk about the USA, America, North America and South America, both the economies, they were badly struck with the drought, followed by Europe. Europe also had the drought type of conditions, and also Africa. For us, also, the announcements were similar, but luckily we got saved by the western disturbances, which brought a lot of rain for us. And India had a good, I can say, good monsoon, though the monsoon was delayed. It was not the big monsoon rains. It was mixed with western disturbances. It has given good rains and a good beginning of this season. So, in Asia, I can say that there were reasonable rains, and these rains were very good in the month of July. But in June also we started getting some decent rains, which made a good beginning. So this season particularly had a very big impact of El Nino, the dry climate, and of course this high price inventory which was there in the international market has disturbed the market in a big way. Because particularly where the demand is not disturbed in the countries of Americas and Europe, all these areas, here the vendors or the companies are suffering with the high price inventories. And in many other parts of the world, particularly if I talk about Africa, Middle East, there a lot of countries are suffering with the currency crisis also, because in some places the distributors don't have money, at other places the banks don't have dollars. So there is delay in payment cycle, and overall the markets are disturbed. If we look at the agrochemical season at large, from Asia's perspective and particularly from India, it has been a very decent start. The start was delayed. April, May was very sad. In June, July was the extraordinary month. August looks reasonable. which means that there will be a good growth in the domestic market, and the avenues of the international market has also started opening up slowly now, because as the prices have become lucrative, the international buyers have also started coming back to the market again, and they are asking for more material. So I can say that overall it has been a good opportunity, because the world has realized that China and Europe alone cannot serve the world, and China plus one and Europe plus one policy is giving a good boost to India. And the large capex which all Indian agrochemical players are investing in the backward integration and the agrochemical sector, it also has given a good boost. So overall, I can say that with the industry eyeing on investment in the manufacturing sector, ultimately the agrochemical business in India is going to grow, and there is a huge scope of growth in the international markets also, and it should pick up. If I talk about some latest data, then as per the information, the total exports from India which has happened in the field of agrochemicals, which includes some of the house pesticides also, it has risen to almost 5.5 billion all-time high, and we are number 2 in the world in terms of the total exports what has happened in the last year. So the domestic market has also grown to about $33.5 billion. So overall, there is a good increase in the domestic market, and there is a good potential in the international markets also. But largely, this potential seems to be for the I would say CRAMS business and company transfers. So they are the permanent businesses which gives the maximum growth. And if you are selling in your brands or you are selling the technicals, that is the market of struggle due to the price war which has happened after this decline in the prices of China. But overall, if I say, then opportunity is very good, and the demand which has started coming in the domestic market and also in the Asia is quite good. So now I'll hand over to the CFO to explain the results, give the numbers, and then I will explain these results.
Thank you, Amrita. Myself, Sandeep Agarwal, CFO in Insecticides India Limited. So during this first quarter of FY24, IL has recorded a revenue from operations of rupees 6,399.3 million, thus registering a growth of around 14.14% on year-on-year basis. EBITDA margins were at around 7.13% in FY24 due to the quarter one, due to the liquidation of high-cost inventory from the previous year. And the total high-cost inventory liquidation during this quarter is approximately 41% of the overall sales. So the sales of our top-performing category from Maharashtra products stands at rupees 2,577.44 million in quarter one of 2024, which is around 61.49% of the total branded formulation sales, as compared to the 2,090.62 million in quarter one of FY23, which was around 56.37% of the branded formulation sales. The top-performing products for this quarter were focused Maharatna products like Hachiman, Tori, Shinva, and Green Level. So this results from the sales team efforts and innovative marketing. So we are continuously focusing on the growth of these focus Maharatna and Maharatna products. So we'll see a category-wise breakup of the sales during this quarter. So insecticides were 30%, herbicides were 64%, fungicides 4%, and biological and PGA were around 2%. If you see the region-wise revenue, then North contributed around 36%, East contributed around 7%, West contributed around 35%, and South contributed around 22%. You will see the segment-wise revenue, then B2C contributed around 66%, B2B contributed around 31%, and exports contributed around 3%. So the products launched during the year, during this quarter we launched one product solution. Total sales in the first quarter was around 12 crores. So the product which we launched last year, the total sales of those products in first quarter is around 92 crores, whereas in last the total sales of these products for the full year was 149 crores. So sales from the in-licensing products is around 44 crores, and sales from the licensing products is around 93 crores. We will see the sales of products which we have launched in FY22, it is around 1,076.3 million, and the sales from the product launched last year, FY23, is around 923.8 million. So the contribution in FY1 from these categories around 48%. So the most sold products are Hakiman of around 511.99 million, Tori 308.86 million, Shinva 187.14 million, and Green Level 221.57 million. Thank you very much.
Thank you, Sandeep. To explain it better, I would like to tell you, friends, that there was a price war in the market due to the price erosion by the Chinese companies in the generic sector. So looking at that, from the very beginning, we made it a point that we have to reach the market in a very focused manner. For that, we identified 6 which were the products which were launched into the COVID period, and there were some new products which is launched this year, and some products which was these are all new 3-4 years. Products majorly launched in last 3-4 years. So we identified them as the lead products or the engines for the company, out of which Sandeep has named many. So these 6 products, we are targeting a sales of about 600 crores in the brand market from these. So on an average, you can say 100 crore per product. So 6 products we are trying to make them the engines. With the lead position will be Shinva, which is the Nissan product. So this we are trying to make it our biggest product for us, and I think it is supported. So as he has explained in the Q1, the herbicide had maximum jump because the demand for herbicide had only started in Q1, and now we have started seeing the sales of insecticide. The season in the north and the central India has already started, and this is the reason that north and south have picked up, and the south and east are trailing behind. As the rains are coming into these areas, they are picking up. So even today, north is number 1, central India is number 2, and south is number 3 position, and east is falling. This is the situation. This will change as change means that south is going to pick up and take the number 1 position, and north and west are going to take it, followed by south east. That is the routine. And if you look at the explanation about the B2B and B2C, so we have got advantage from these key products both in the B2B segment and B2C segment. At one place, our brands are going fine, and at the other place, we got good response from the B2B customers also, and we have supplied these products to B2B customer also, and there also we have gained a good increase. Overall, I can say that we have achieved an increase of about 14% in this quarter, and the next quarters which are going to come looks even better. And I still feel that the EBITDA margins will be able to do better actually from 9 to 10% at least. And if this support of rains continues, because we have got a very strong pipeline of products, which in the past we used to launch during the beginning of the Kharif season, but now as the registrations are coming at odd times, now we are not delaying our launches. I mean to say that I have already 4 launches lined up in quarter 2. Though I am going to get very small season for these, but whatever market I get, I will try to launch these products so that they can feel the market. So we are going to launch 3 herbicides and 1 insecticide into the market in this season. All the 3 herbicides are 9(3) products actually, and they are the mixtures. And we have very high hopes from these 3 herbicides, and they should do very good in the next year. So first is the Green Expert, which is herbicide for coffee. Second is Nakshatra, herbicide for sugarcane. Third one is Opaque, which is the herbicide for onion, and it is going good in many other crops also. So we are working and developing this product, and we are going to launch these products in the month of August and September. Supremo SP is an insecticide, which is going to come for paddy in particular and vegetables, and we are also going to launch these products. Along with this, we are also focusing on the biological segments. In the biological segment, as we have already started IL Biologicals Limited, it is focusing on filing some patents for the new biological products, and this year we'll be launching this company also. So I believe that all these new launches of IL Biologicals are going to come after Diwali. So we'll get very small season or the Rabi season to launch these products, but still we'll start the things and we'll launch these products in the market. So we are very, very clear that how we have to proceed in the future. I mean to say that we have already spent a lot in our projects, particularly the Dahej project. So Dahej project, the major investment is already made, and we were about to launch this product. The heavy rainfall in that area has delayed the project further, and now we plan to start the production in the new plant only after Diwali, because generally during the Diwali period we will shut down. So by that time we will set up the plant, and then there are some changes also we have planned in Dahej. Changes due to the current situation. Because now in the current circumstances, we have realized that there is no fun of competing in the generic molecules. Either we have to come with their mixtures or we have to bring the new updated molecules. So we have a very pipeline of products which is lined up for future. So looking at that pipeline, we are trying to set up the plan for these products actually in Dahej and also in Gujarat. Our vision is that we will be launching at least 7 to 8 products for 2024-25 in the herbicide and the insecticide segment and also fungicide segment. And most of these products will be making the new technicals by ourselves in the expansions what we have done. So this will be coming in a big way. And similarly, to talk about the new investment which the company has made in Concall. So here we propose to there is an acquisition of about 15 acres of land. This land it already has one small plant getting already constructed here. So we'll renew the plant. So it will expedite our entry into the manufacturing very fast. So we have a 2-year project which will be starting in 2023 post Diwali. So here we are going to set up a formulation plant, technical synthesis plant, and maybe the biological plant. So not sure about the third one, but it's still on paper. But this plant, so Concall is a very strategic location between Turkey and Gujarat, and it will be on the same highway, the national highway. So I feel that it is going to give us the edge in the marketplace, and it will help us in consolidating both our manufacturing of formulations as well as technicals. Also, I would like to talk about the exports. So the export market for us has been slow. We were wanting to grow in a big way in the last year, but we could only match. The demand in the market was also slow due to the reasons which I have explained before. So here I would like to tell you that we are spending a lot on data generation, and we are registering our products across the world in all the countries. The demand at present is slow, but our registrations are in process, and we have already got more than 300 registrations in various countries of Latin America, USA, Africa, Europe countries, everywhere in the world. So we are in the process of setting up. This is going to take off in a reasonably big way. I would say it's on the brim of getting a good success. At the moment, the exports will remain reasonable. We have done a target of about 200 crores this year. I still believe we will end up somewhere between 150 to 200 crores. So you can say that there might be a downfall about 20-25% in our assessment for exports. But in our B2B and B2C sales, the domestic sales, we are going to do very good, and there won't be any downfall. And we should grow by minimum double-digit growth, both in retail and bottom line. Coming to the biological, here I would also like to say again that we are investing a lot on R&D, and we are working with the new products, and we are trying to file our patents. Once these patents are filed, then we'll be launching these products because the registrations is relatively easier, and we are working on a lot of registrations in these segments also. So biologicals are in the nascent stage in the country, I can say. The demand is slow, the growth is slow. The future belongs to the biologicals also. There will be a time when biological will run parallelly to the chemicals. So we realize that, and that is the reason we are spending on the R&D and manufacturing strength of these biological products. So, friends, we have a very clear strategy that we will bring new technology and new technology products to the market. Slowly, we will be doing the tail cutting of the generic, and we will give value-added products to the customers, because we believe that ultimately it is the solution a customer wants. They don't need the product. So looking to their requirement, we are trying to bring in new solutions for our customers. And I believe that we have already set up our strong pipeline of distributors, dealers, and network, and we are continuously working with them, and we are trying to capture the market in a very planned fashion. Now here I would also like to add that we wish to use the technology in our system. So far we are doing the ERP on SAP. Now we have taken on HANA, which is the latest generation of SAP. We have upgraded that. In the same fashion, now we are working on the business dashboards are BI dashboards, which again we have upgraded recently. Similarly, we are also working on the CRM package with Salesforce, so one of the best in the world. So we are trying to create our connectivity with the distributors, and not only with the distributors, but also with the retailers and farmers, and also with the crop advisors, which are generally on third-party role. So with the people who are not covered by the accounts package or ERP package, we are trying to cover them through the CRM module, so that we can bring in technology in our system and we can improve the connectivity of our network and the connectivity of our customers with the company. So with this, I would like to thank everybody for the very participation in the conference call, and now open the house for the questions.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Bharat Gupta from Fair Value Capital. Please go ahead, sir.
Good afternoon, Rajesh and Sandeep. Thank you
Good
for
afternoon.
taking my question. A couple of questions from my side. So first, in regards to inventory situation. So firstly, what would be the impact or an inventory hit which we would have taken on our Q1? And what is the quantum of higher cost of inventory which is left in our books now?
We are continuously working on this inventory. We could reduce the inventory by about 100 crores in Q1, and we are able to reduce it by 100 crores in this in recent 35-40 days. So I mean to say we are regularly looking for this inventory actually and trying to bring down the inventory. And as a strategy, we are moving out of some of the generic products, technical manufacturing, so that again we don't face this similar situation what we have faced today. So this is going to support, and most part of the high price inventory is going into the market. So I think that we have got rid of the maximum inventories. Sandeep ji can give the numbers exactly, and this quarters to come should show a very good growth actually, because we are cutting down our inventory in a big way.
Right. Sandeep ji, can you just highlight on the numbers? Because I think in the March end, 850 odd crores was the inventory level, right? So at the end of June and probably like in the current scenario, what would be the total inventory which will be there on the books?
Because as of today, if you see, the total inventory is around 600 crores only. So we are already down to 250 crores as of today.
Right. Right. So secondly, in terms of the demand, like in the current environment, you highlighted that there has been a positive. So, like in terms of how do you read the overall scenario pertaining to Kharif? Because is there any issue like in terms of inventory overhang which we are seeing across the industry?
I don't think that there is any inventory overhang because of the falling prices in the beginning of the season. Nobody in the market wanted to keep the inventory. That was one reason that the demand was very, very slow, particularly in the months of March and May. So at that time, nobody was buying the material, and the sales only started when the sale in the market started in the month of June. So June also was relatively slower. July picked up pretty well, and August continues. So I mean to say that the system was not flooded with the materials during the time. Generally, distributors have the tendency to buy the material early in the month of March, January, February, March, April, May, June, because the demand starts from July and they want to keep the stock. But this year, since the scenario was the falling price scenario, so they didn't want to keep the stock with them. So the stocks were not there, and whatever has gone to the market, it has gone for the actual sales. So that way, the market is still vacant, number one. Number two, the demand is good, and looking at this demand, the sales are going. So the sale numbers are going to be very good actually. Like, just to give a reference, I'll not talk much, but I'll say that July for me has been all-time high month actually, July 23. So we have never touched those figures. Those figures, the results will be out in the, when we talk about Q2. It has been all-time high for us, both in terms of sales and collections.
Right, sir. Sir, also, like you mentioned in your opening remarks that there has been a good level of pricing cuts. So just want to understand, because China has offloaded a good quantum of inventory in the system, how the peers have reacted to it, and what kind of a pricing cuts have we taken across both our generics as well as on the branded space?
Like majorly the price competition has happened on the generic segment. In the off-patented segments also there have been pressure. The prices have come down. So it's difficult to talk about molecules because it is very well from molecule to molecule. Yes, on an average you can say that there is about 10% plus of price cut on an average.
Right, and that is common across the industry, right?
Yes. It varies from product to product because some products might have little more price. Some products have lesser. But here there is one more information. The market has already started bouncing back, the international market also.
And sir, in terms of stabilization, raw material prices, so are we seeing that the bottom was made in Q1 and particularly now going forward, the prices are seen to be on a stable side?
Looks like that.
Also, sir, in terms when we look at the backward integration facility, so we also booked a good amount of inventory for the production. So how are we utilizing it?
That production will take out actually in other plants. So whatever inventories we had set for the backward integration, all those we utilized at Diwali. So that target we have made. But after that, we'll be changing the plants to the other products actually. And some products which will be viable at that time, we'll start making them also. So we are making some changes in the plants because initially the targets were different. Now the targets have changed with the changing time because the price of some of the products have come down so to a level where we might have to rethink where the quantity we were thinking we are going to make it, we are not going to make it. So that strategy is still under working. And we have identified 7 or 8 new molecules which were not on cards to bring that fast, but now we are bringing them. So there will be some changes in the plant.
Right, sir. Sir, like you mentioned that particularly we are taking out market share and probably giving more growth in comparison to the industry. So, like we have absorbed the higher cost inventory element, like you mentioned, 41% of the inventory is currently out there in the system, and we are on path to liquidate it as soon as possible. So, in terms of the guidance going forward, both in terms of revenue and in terms of EBITDA, don't you think 10-12% kind of a guidance seems on a very conservative side, given out the way we have been performing? So,
my idea is to perform better and not to give guidance actually. So I am keeping it conservative, and I would like to perform better in Q2.
Right. And profitability-wise or in terms of EBITDA margins-wise, so do you expect that there will be an upward revision because of higher contribution coming out from the new products?
Yes, Q2 anyways is the highest, and a lot of contribution is going to come from the new products. So yes, Q2 you can take it as it will be having the best performance, both in terms of top line and bottom line. Yes, there can be surprises in Q2.
Right, sir. In regard to CapEx, sir, because I think we have taken expanded our facilities and we have acquired 2 land parcels. So what CapEx are we looking like for both FY24 as well as for FY25?
Like FY24, it won't be a major CapEx because we have already spent the land this. So we would spending roughly about 55 crores. And then we will start it slowly. So the major expense is going to come in 24-25 because 24 and 23-24 it will be majorly just some small advances. The deliveries will start later. So if I say then we are making a plan of spending about 100 crores in Sotanala site and about 25 crores in Gujarat. In the 25 crores will go in SEZ expansion, and 25 crores will go in the Dahej plant. So total 150 crores will be spending in next 2 years.
Also, can you throw some light on the biological plant also? Like I think we acquired some land parcel out there in Nimrana. So what's the progress over there?
We have acquired some land in Shamli. So we have converted into the land farm, it's a trial farmland actually, and we are doing a lot of trials in this land. We are not putting up the plant there. So the new plant is going to come for biologicals either in Jubanji or Sultanala. So that it's a decision. So that's all we have to take. We'll take it shortly. So either the biological is going to establish at Jubanji or at Sultanala, either of these places.
So just a question from my side, if I'm allowed. One, in terms of the B2B segment, so I think that their revenue contribution is close to 30%, and I think majority of it is going towards active ingredients or towards formulation, towards the other institutions. So, do you think with the China coming back in sector and because of the overproduction out there, so do you expect that our focus will remain mainly towards the B2C segment and we will be seeing a good amount of change in the revenue composition going forward?
I don't think that there should be a big change in the revenue because this will remain like 70% because of the major focus around the brands, which will always remain around the brands. But yes, we'll get good B2B demand actually. So 70-30 is okay for me. It's broadly reasonable, I think.
Okay. And Maharatna sales have also been...
Mr. Gupta, may we request you to join the question,
sure.
sir, as we have several participants waiting for the turn.
Sure. Thanks, Rajesh.
Thank you.
Take the next question from the line of Aniket Kulkarni from BMSPL Capital. Please go ahead, sir.
Yeah, good afternoon and thanks for the opportunity. Right now we just spoke about the capex. I'm sorry I missed it. Can you just highlight what was the new capex which has recently happened and when will the capacities become operational and what is the revenue potential from all of this capex which is coming up or which has been already done?
We have already done three in the past years. So Jubanji has already come into production. The technical plant has increased the capacity by almost 50% of the technical plant. Dahej plant will come into production post Diwali. The major expenses are already done. It is just the finishing stages. Some equipment are being placed and they will be capitalized by Diwali. So 95% of expenses are already done in Dahej. Apart from this, we have taken one land parcel in Pakistan, Sultanala, where we have spent almost 25 crores in acquisition of this land. So we have a budget of about 100 crores. We have budgeted about 100 crores for this project, which we'll be spending over 2 years. And along with this, we are also going to expand our STZ facility, where we are going to spend about 25 crores. So another 25 crores we have kept for routine expansion in Dahej and some other small projects like biological. So total spent in next 2 years going to be roughly about 150 crores for the expansions. So yes, the plan is not made in detail so far because this acquisition has just happened last week. So it is more on purpose now. So we'll be planning and this will help us in consolidating our formulation facilities. And along with the formulation, we are going to set up the technical plant also at Sultanala. So this is also going to support. The STZ plant will be majorly for export demand.
Okay, got it. And any guidance on the revenue potential of this capex?
We have targeted a CAGR of 20% in next 5 years. And I believe that we should be able to deliver it because whatever we need, we are spending on R&D, we are spending on registrations, we are spending on capacity expansion and network expansion. So when I'm spending everywhere, I think that we should be able to achieve this CAGR of 20% easily.
Okay, got it. And just a broader macro-based question. So in the next year, let's say FY24, what are all the risks to the business that you see going into this and any steps or any plans to mitigate them?
There are no very strange risks, but specifically the generics are always under pressure. So a lot of generic products are always under pressure. So to combat that, we are bringing the new generation of patented molecules. We are bringing the patented molecules through the Japanese partners. And we are also trying to make the mixtures with the Japanese products. So here also we back the IPs. So we have applied more than, say, how many? More than 40%, roughly 39% are already applied so far, and we have had almost 21 patents. So we are now trying to bring in more patented technology so that we can face this competition. And parallelly, we are also working on the biological segment. In the biological segment also, we are filing patents. So I mean to say, so whatever technology is required, we are trying to establish that technology. And now, since it is the time of technology, we are spending a lot on technology also. I talked about SFDC, I talked about the CRM, what I am doing. We have already made the upgraded our SAP to HANA, the latest version. We are trying to upgrade all our systems. The BI dashboards already we are looking at all the things. So we are trying to upgrade everywhere. So I think these are the things which are for risk mitigation, and the new production sites are also purchased. That is also the idea to strengthen our production capabilities, because when we are going to launch the new technicals, then I have to first establish my capability and capacity to manufacture these technicals and then the formulations. So we are setting a plan for everything. So I think we are well equipped with the challenges which are going to come. And at the same time, we are reducing our inventories. We are not only expanding, but we are also doing the trade. So at some of the synthesis or the technical manufacturing part, we have already decided that wherever we see a tough competition and competition, we are going to move out of that product. So we don't do the synthesis. Maybe I continue with the brand for some time, but later on, if the brand also comes in the market, then we'll put that solution to the market.
Okay. Thanks for the detailed answer.
Thank you. We take the next question from the line of Ranveer Singh from Nuvama. Please go ahead, sir.
Yeah, thank you for taking my question, and congratulations for good number in this quarter. So my question, a few things I listened in call was not able to reconcile it. So your guidance has been 10-12% for FY2024 for revenue guidance as per your release. And again, you mentioned some 25% CAGR. I couldn't understand. Can you help us understand?
The guidance for this particularly is 12% only. The quarter one was very, very, we have grown by almost 14.5% in Q1. You have seen that. So the sales growth in Q2 looks even better. When the question was put about the CAGR, then I told that we wish to grow by 20% CAGR, not 25. Please amend it to 20%. So that is the vision of the company, and we are poised to deliver that. But I don't want to give the numbers, the big numbers for this year. So I've said 12%, but I'll beat this number in a big positive manner in this quarter itself, and you will realize that. So we are working with this 20% CAGR growth in mind, and we should be able to deliver that. But if I have to give the numbers for this year, and also in the written statement, we have mentioned 12%. So I don't want to give a big number in front of it for this year particularly. That's it.
Okay, so we should consider that 12% guidance so far, and then we will try to catch up in subsequent years. So.
Yes, and I believe that even this quarter it's going to be like for us always the Q2 is the biggest quarter, and this should give a good jump actually. This Q2 should see a reasonably good jump.
Okay, so just taking into account even the 10% or 12% growth means roughly 200 crore kind of incremental revenue. But even on a conservative basis, what we are expecting. And then we saw that 6 product launches you talked about has a market potential of 600 crore. Am I right?
I will have to understand in full. These 6 are not launches actually. These 6 products I have launched in last 3-4 years actually. So these are the focus products. Now we are taking them as the engine because during the COVID period, we get the minimum time to promote the products into the market because people were not able to move around in the market. So some of the products were already doing good and some products have performed this year. So we made them the focus or the engine of our company, and we had a target that we should target around 6 big products at least this year, which will give us a minimum net sales of 600 crores. So we made that point and we are working around that point, and like we have been very, very successful in this strategy, and we are able to do that. And most of these products are not generics or not the generics or which face any stress. So I mean to say that people always used to ask me that your old molecules have gone, like Thimet has gone, Novan has gone, which were 100 crore plus products, and now I have Monocell, which is again in stress. So what will happen if these go? So I mean to say that we are trying to create the brands which are better brands than what I had in the past, the generic brands, and we are able to take them to the market in a big way and establish them into the market. So that we portray.
So that 6 products includes that your base existing big products and plus new products. That's what you're saying. And that the cumulative number should be 600 crore.
Difficult to explain over phone, but we have about 1 dozen products in Focus Maharatna, and we are working around Focus Maharatna, and Focus Maharatna has seen a big growth here, and then we have about 2 dozen products in Maharatna. So we are trying to focus around these 2 ranges, Focus Maharatna and Maharatna, which are the value-added products, and we are working around these value-added products. And the new products which we are trying to launch, they also are going to join this trend. So the new launches which are going to come in future are going to be value-added products, which is only. Rest things are going under tail cutting. If you see our performance also, I think it's clearly given Focus Maharatna and Maharatnas. The Q1 saw lesser sales because it was only herbicide. Right? Q2, the major sale is going to come from Focus Maharatna and Maharatnas also. So we are working around these focus products to give us the maximum volumes.
Okay. And launches, about the new product launches, you talked about 4 launches.
Yes, 4 launches are lined up in this quarter. These products will be launched. So in year 1, they won't be big because half the season we lost by the time I launched these products. But I'm not going to delay as I get the registration, because the registration is taking a lot of time. So the day I get the registration, I am going to launch these products immediately the same day. So that is the vision. So we'll launch them right away.
And any indication of potential of these products? What kind of revenue?
Potential, they should be the part of my Maharatna brand, and some of them may qualify to be Focus Maharatna also. So if I look at these products, out of 4, at least 2 should enter into Focus Maharatna range into by next year itself. So I hope that. So let's see the success.
Okay. And last one on the biologicals, how much CapEx we have done and what kind of the currently necessary phase? So when we can see meaningful revenue coming in, any outlook there?
Okay. The biological revenue is already started coming from last 5-7 years because we have set up the R&D center in the third-party facility. So my CapEx is never huge in the biologicals because I have not set up my own plant so far. It's only the R&D center which is ours, and the plant is a third-party plant. So the numbers are not big, but yes, I can say that today I have 2 biological R&D centers separate, and we are spending on R&D. So we have a team of about 1 dozen doctors who are working in the biological segment itself and are filing patents. So at this time, the major focus is in developing the pilot scale technologies and filing the patents. So we'll start launching the biological products from next year itself. So into 2023-24, there might be 1 or 2 launches actually. They will be more a test launch type of thing. Otherwise, we have a range of over 5-6 products in this segment, which are already in the market. So that is giving a small business to us at the moment, roughly about, I think, 1-1.5% of our total turnover, or maybe somewhere about 1.5 to 2% of our total turnover, not more than that. But this is going to grow slowly.
Okay. That's it from my side. Thanks a lot. All the best.
Thank you.
Thank you. Ladies and gentlemen, we have to ensure that management is able to address questions from all the participants in the conference. Please limit your question to 1 per participant. We'll take the next question from the line of Sampath Nayak from Tiger Asset Wealth Management. Please go ahead.
Hello, sir. Thanks for the opportunity. My question is on the product mix front. So currently, like out of the revenue, like how much of the revenue is coming from branded and how much is coming from generics?
We market all our products as branded products. Even the generics are marketed as branded products. But for the convenience, what we have done is we have divided the product into Focus Maharatna, Maharatna, Gold and Silver. So silver products are generally the tail cutting products. And They contribute roughly 2 to 3% of our turnover. Gold products are the large market demand generic products which are very popular in the market and which the farmer knows and distributor knows, and they demand it. These are generic products basically. They contributed about 30% to our turnover. Generally 30 to 35, these keep on varying. Then we have Maharatna products. Maharatna, we have about 2,000 products which are the focus products of the company. So that give around another 30% type of revenue. And then on the top is Focus Maharatna, about 1 dozen products which contribute about 55%. So we had divided our Maharatna segment to Focus Maharatna and Maharatna only last year, and we have been quite successful in increasing our share of Focus Maharatna. And this year we are very, very highly focused around Focus Maharatna products, and we are trying to increase that share from 35% plus actually. So that way you can say 2/3 type of volume we are targeting from our focus products, and 1/3 volume from the routine or generic products.
Okay. Thank you, sir. And one more question is on the training. So, is it still relevant or like are we still seeing the impact of it?
Majorly we have taken the impact because a large impact came in the last quarter of last year. Reasonably good impact also we faced in Q1. So most part is over now. Now only there will be some training stocks which will go in routine. So I don't think that we need to take a major hit now after this actually. The majority hit we have already taken.
Okay, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Sandeep from Arjun Partners. Please go ahead, sir.
Can you hear me, sir?
Yes, yes.
Okay. Just wanted a clarification on the margins and the high-cost inventory. I think last call you had said that by 1Q, the high-cost inventory will all be done. Is there anything pending now for Q2, or can we see the double-digit margins in Q2?
Definitely, I will also try to see the double-digit margin in this quarter because, agrochemical business is a cyclic business. The majority of the business comes in the 2 quarters. Generally, we target 65 to 70% or 65% of our business in 2 quarters. So first quarter has been fine, and the second quarter is going to be extremely fine. And we can imagine or we can target a double-digit margin in this quarter. Actually, it should come. So that's my vision also. So as I told, majority of the inventory, the high-cost inventories are already done. But still I have stocks. So there may be some small stocks of high price. But I don't see a loss-making inventory at the moment in my system actually. I think I should not make much loss on that. So we can we can imagine a double-digit margin in this quarter.
Can we have the double-digit margin for the full year possible? Because
I've already given comment I end writing that 9 to 10% we are expecting EBITDA in this year. So I don't want to revise that because we have already written that. So let's see how the season proceeds. So I'm also quite hopeful that we got a beating last year, and we have to we should be able to come out of that situation in this quarter.
Thank you, sir. That answers my question.
Thank you.
Thank you. The next question is from the line of Hitesh Agarwal from Fair Value Capital. Please go ahead, sir.
Thank you, sir, for the opportunity. So you gave guidance of around 20% revenue growth in the next 5 years in a stable scenario. So just wanted to understand what would be in a stable state scenario, what will be the margin guidance over the next 4 to 5 years?
Basically, we always target a margin jump of over 100 to 150 points year on year. Last year was the extraordinary year when we made a loss. So first, this year we made a recovery. And after that, again, you can target a jump of about 100 to 150 basis points in EBITDA levels year on year.
Just one more question. In exports, you have mentioned in the press release that there were some positive signs coming. Could you throw some more colors, like since majority of the export-oriented companies we are seeing have highlighted concerns on high channel inventory?
Definitely, there is high inventory in the channel. There is no doubt about it. Because, again, the inventory is high price inventory, what they have. But we have been buying the stocks of the cheaper price continuously since last 5 months. I never stopped, so I have to take the MTM losses also in the month of March because of my cheaper purchases. So I think we should be able to get some advantages because we'll be able to average it out and give it to the offer to the market at competitive prices. So we are expecting some good orders in this quarter actually. So it may not convert into sales number in the month of July or August, but I think September onwards, we should be able to deliver good export numbers actually. So this is the reason I am hopeful that we should be able to cross our 150 crores turnover in the export segment.
So for FY2024, 150 crores is the expectation though. That's what you're saying?
Initially my target was 200, but now we toned down to 150 crores.
Okay. Thank you, sir. Thank you.
Thank you, sir. Ladies and gentlemen, we take the next question for the day from the line of Lalit Kumar, an individual investor. Please go ahead, sir.
Thank you. Thank you, sir. Hope I am audible. I think a lot of our speaker friends have spoken a lot on revenue, and I'm trying to just zoom out a bit. Every 5 years, the company has grown and doubled. So 2012, maybe we were at 500 crore mark sales. 2018, maybe we were 1,000 crores. Now we are almost 2,000 crores. If you look at our margins, right, I mean, given COVID, finance, just zoom out a bit, we're doing about 12-13%, and now we're at close to about 6%, right? And because of which market has not rewarded us. I mean, 10 years back, we were at 1,000 crore market cap company. Now also we are. So, as a company, or we probably, because we are doing a higher revenue, are we losing out in margins? And I'm not trying to understand the way revenue might not able to incrementally get, higher margins. So, guidance of 9% is good, sir. When we get to see a sustainable margin of 12-13%, what all the steps and actions which are taken over there?
The entire working, what we have been doing around is for the target, what you are saying. Because when I say that we spend on R&D, the R&D spends are to bring the new generation molecules and to bring the molecules of the chemistries which are value-added chemistries. So today we are a unique company which runs 4 R&D centers, and 4 R&D centers have different targets, and I'm glad to inform the investors that all these 4 R&D centers are working fine and they are bringing the technologies. In the past, we were struggling with a lot of, I would say, in getting the registrations, a lot of time was going. So we had a lot of court cases also regarding this because people were trying to evergreen the off-patent chemistries, and a lot of time was getting wasted in this. So after a lot of struggle, we have started back with getting the registrations. And now the registrations are coming, and since the registrations are coming and we are able to develop these technologies and also develop or scale up our plants to make these technologies, I think the major launches which are going to come in future are going to be launches of the value-added products. And now, number one, at one point, we are bringing the new generation value-added products. Number 2 point, we are coming out of the products which are the generic or highly competitive products. So which means that low revenue giving products we are going to leave, and new higher revenue giving products we are going to add to our system. So again, in R&D, we have 2 types of motives. Number 1 is to do the backward integration, and by doing reverse engineering, we try to bring these molecules. Number 2, we are going to make better formulations or new mixtures which we are launching into the market. Here we gain the IP. For the IP, we also work with the biological. In the biological segment, we are trying to gain the IP, and also with our partners like Nissan, we are trying to launch new chemistries which are also IP protected products in the market. So the major focus of the company is to bring the patent technologies in the market so that we can give higher value for money to our customers and to our customers, and we can make better margins for our investors. So that is the vision. You will find the change. And this we have already established our plans. We have already invested because when I said that I might have to strengthen my production facilities, the formulations and technicals further. So we have invested into this unit in Sotanala. So after all these investments and into the R&D, technicals and the plants, I believe that now the time has come when we should start delivering better margins. So, yes, challenges were there. Challenges have, because we are spending a lot on R&Ds, on manufacturing facilities, different facilities. Our expenses are relatively higher, which was giving a pressure on us. But I'm glad to inform you that still we are a debt-free company. All the investments we have made is through this, and we have also realized that there is no fun of keeping the high inventories, and we are very strongly working on bringing down our inventories. We are very, very confident at the end of this quarter, our inventory should be somewhere in the range of 550 minus, not 550 plus. So we will come into the reasonable numbers. So we grow our sales without growing our inventories and bringing the sales for the new generation products, which will be the value-added products. This will increase the margins overall for the company. And we should fall in line very shortly with the best performers in the industry. That only I think.
Hopefully, I mean, I've been a shareholder for 5 years, and hopefully, to see company at least getting back to the past year margin growth, and that's where the market will. This was more of a
definitely we will see the growth in margins by our performance, because we have established the base for that, and now it is just to go into the market. And our new launches have been very, very successful in the market in the recent times. Because whatever we have launched in last 2-3 years become very successful. Very, very positive appreciation is coming from the market. And I'm confident even the new launches which are going to come, about more than 10 or a dozen products which are going to come now, from now to next 6, 7, 8 months, they are going to launch these products. So I expect a similar success out of these products also.
Got it. All the very best. Will continue to track for next few years, sir.
Yeah, sure.
Thank you. Ladies and gentlemen, with that, we come to an end to our question and answer session. I would now like to hand the conference over to the management for closing comments.
Thank all the participants for attending this virtual session. We believe that we have satisfactorily run through our company and business model and addressed every arising question thereon put upon the floor by the participants. We continue to see growth in our broad product portfolio and witness a strong momentum across our business, supported by the R&D, backward integration, and also through our Japanese partner. We remain focused on bringing new molecules, exploring new markets, and creating value for our stakeholders. Please follow with Investor Relations team, Vinayak and Naman Maheshwari, Captive IR, if you have any questions which were covered in this session. And hope you have a great day ahead. Thank you once again. Thank you very much.
Thank you, sir. On behalf of Choice Equity Broking, conclude this conference. Thank you for joining us, and you may now disconnect your lines.